Welcome back to Over the Horizon. Today, I'm here with Jesse Myers, the head of Bitcoin strategy at the SmarterWeb company. Jesse, thank you so much for coming on the show.
Yeah, thanks for having me, Joe. This is a long time coming.
Yeah, no, it's been quite some time. I remember I gave you I think I was on stage last year in Vegas, and I gave you a shout out, your Bitcoin valuation model. Obviously, hugely famous, spread everywhere. Even Michael Saylor uses it. Now you're working at SmarterWeb. I guess we could just start there. Tell the audience a little bit about yourself, what SmarterWeb's goal and mission is, and kind of the state of the market right now.
Yeah, so SmarterWeb is the leading Bitcoin treasury company in the UK, the first company to pioneer this pathway to be a Bitcoin treasury company in the UK, and we have the largest Bitcoin treasury in the UK at the moment. 2,664 Bitcoin in our treasury, which makes us, the 30th largest corporate holder of Bitcoin in the world, and obviously the leader in the UK. And we see ourselves as very much following the roadmap of Metaplanet and strategy. We are trying to become the brand that's synonymous with how you gain Bitcoin yield, meaning growing Bitcoin ownership, compounding Bitcoin in the UK for the benefit of UK shareholders and also international investors. So that's what we're doing, and it's early in our life. We're 6 months into this journey, slightly ahead of pace of where Metaplanet was at the 6 month point. But the last 4 months or so, the tide has gone out for Bitcoin treasury companies globally, and that's, in my view, a temporary sentiment-driven thing that makes it harder for Bitcoin treasury companies everywhere in the world to generate yield for now. But in my opinion, the model of using capital market tools to capital market tools to arbitrage fiat into Bitcoin is there and will always be there so long as Bitcoin is still monetizing and there's still capital trapped pockets of the TradFi world. There's going to continue to be opportunity to deliver Bitcoin yield, increase Bitcoin per share over time. And so the temporary tide going out of sentiment about the capacity of these Bitcoin treasury companies to deliver shareholder value, I think, will be just one side of the pendulum, and in time will swing back to.
Absolutely. Thank you for summarizing and kind of opening the show there. Let's talk a little bit about why the tide has gone out recently. Obviously, Bitcoin, the underlying asset, which is that's the main treasury asset behind the Bitcoin treasury company. That's the idea. It's plunged 36%. So this is the largest drawdown that we've seen this cycle. We've seen two separate 30% drawdowns. Bitcoin managed to recover quite swiftly after those. The macro backdrop is definitely very different to where we were previously during those drawdowns. There's a lot of uncertainty circulating around in markets now. And obviously that has had an impact on risk-taking behavior broadly. You've seen it in Bitcoin, but Bitcoin treasury companies sort of being these levered Bitcoin instruments, at least from the common stock perspective, they've taken a major hit. So yeah, kind of speak to what has caused this sort of these doldrums in Bitcoin treasury companies.
Yeah, I mean, that was a great setup. You understand the macro very, very well. So yeah, it's interesting because Bitcoin's not having a good year, despite what you would think would be a really good setup for Bitcoin. Gold ripping this year. You would expect Bitcoin to follow that. I still do expect that to even out in time. But if you think about where we were about a year ago in terms of enthusiasm for Bitcoin, the price was running up to 100,000. Michael Saylor had the New Year's $100,000 yacht party, 11 months ago now. And everyone was greedy for Bitcoin, right? Everybody wanted more Bitcoin. Bitcoin was going who knows how high in 2025. And of course, that's not how it has played out. And I've seen some compelling math about how from the guys at Tobam, which is a French capital allocator, that makes it quite a compelling case that Bitcoin treasury company valuations are largely dependent on sentiment about where Bitcoin is going. So when people are excited about Bitcoin, when they're greedy for more Bitcoin treasury companies see a lot of that, beta, basically. They benefit from that demand and that interest. And what's happened over 2025 is the opposite, right? We went from a level of high enthusiasm, excitement, greed for Bitcoin to, at the moment, quite low, quite pessimistic outlook for Bitcoin. People sort of viewing it as the 4-year cycle top is in, and now we're doomed to have a bear market, an 80% drawdown the way we have in the past, despite not having had a proper bull market that would justify or necessitate a major bear market that follows. So that's kind of where we're at now. And I think along the way, there became an opportunity for hedge funds, this sort of Jim Chanos trade. Hedge funds that, in my opinion, misunderstand what a Bitcoin treasury company is and why it has value. Hedge funds, it became popular to have the thesis that if a Bitcoin treasury company is trading at a premium, that's not justified, and that's a deviation from what you would expect, and there would be a reversion to the mean. And so you could take a short position on a Bitcoin treasury company trading at a premium MNAV, and long Bitcoin, the underlying asset, and in time benefit from that that premium disappearing. So you profit off that trade, and that's what Jim Chanos very vocally did with MicroStrategy, and I think that became quite a popular trade with hedge funds over, because of the excitement in Q2 about Bitcoin treasury companies and how high the premiums got. I think that invited a lot of that capital, which in my opinion, like fundamentally misunderstands the value proposition of a Bitcoin treasury company. But when you have that much capital getting on side with that perspective during conditions when there was probably too much enthusiasm, it was the right setup. It was the right trade for those hedge funds. And I think that was basically a thumb on one side of the scale that helped accelerate an unwind of that enthusiasm for Bitcoin treasury companies that became too great in Q2. The other part of it too is what we've seen with Bitcoin treasury companies was the success of strategy and the success of Metaplanet. And then because of Metaplanet, really, a whole bunch of new Bitcoin treasury companies popped up, but with a lot of different models. And SmarterWeb is, I think, quite cleanly in the same vein as Metaplanet, in the sense that started small, has developed a track record of growing Bitcoin per share over time. So there's a growing body of evidence that we deliver Bitcoin yield. And that's in contrast with what became quite popular, which was do a pipe deal to buy as much Bitcoin as you could up front and then deliver Bitcoin yield somehow after that. And that became the popular model because it's quite attractive to management, frankly. It's attractive to two stakeholders or two parts of the equation there. The capital that gets a discount to do that deal. If you're offered a 10% discount and you can hedge out your exposure immediately, collect that 10% discount and be on your way because you don't actually care about Bitcoin and you don't believe in the model, well, that was a winning trade for you. And if you're the management team, you get to now sit on a big pile of Bitcoin, and that's a win for you. The people who lose in that scenario are the retail investors who buy the IPO and anywhere on the way down as the insiders take their capital out and collect that discount. So I think there's been a lot of that too, a ton of that, unfortunately. So the combination of the hedge fund short trade plus the pipe deals unlocking and that capital exiting, I think together brought down the enthusiasm, brought down the MNAVs for Bitcoin treasury companies everywhere. Whether or not they had a track record of delivering Bitcoin yield, everybody's MNAV came down. And that's kind of what drove it, with the backdrop of decreasing enthusiasm about Bitcoin in 2025. So that's kind of my take on how we got here.
Very well said. That's extremely comprehensive and a lot of angles to attack it from. Bitcoin treasury companies underperformed for, numerous reasons. Bitcoin underperformance this year relative to expectations. Everybody thought it was going to be a banner year. Turns out it wasn't. We're now negative on the year. That may change. I'm of the opinion that it'll change in short order. Then you had the hedge fund short pressure. And that was kind of reflexive. If Jim Chanos is doing this trade, other hedge funds follow suit. Not to mention that it's just very popular to bash on this model and bash on Michael Saylor in particular, which has this downstream effect of negatively impacting the other people who are running this trade. And then the other thing, which is that you had kind of these pipe deals, which have been viewed increasingly in the Bitcoin community as really toxic. X feeds talking about pipe deals gone awry and these massive compensation packages that people are giving themselves that just seem totally unwarranted. Talk a little bit about how you guys did this a little bit differently at SmarterWeb.
SmarterWeb had been an operating business, a private business for 15 years, and then decided to go public in order to pursue the Bitcoin Treasury strategy in addition to running the operating business. And so that happened in April. And so when I was thinking about that, it's like most Bitcoin Treasury companies have underperformed, except the ones that did a good job of increasing Bitcoin per share quite aggressively during the good period in Q2 and Q1 if you existed at that point, which most of them didn't. And SmarterWeb did a great job of increasing Bitcoin per share to a point now where our the amount of Bitcoin we hold per share is, I think it's 672 sats per share, which is something like 2/3 of a dollar, roughly. And that was up from zero, right? Like in April, that number was zero, and we increased it to where it is, mostly in Q2, a little bit into Q3, and then it's been quite tough sledding for the last couple of months. And so yeah, those companies have done quite well actually for the year. Value of SmarterWeb IPO'd with a valuation of just a few £1 million. At the moment is, I think, about £200 million company, just shy of that. So, and that's largely almost entirely due to the successful, aggressive accumulation of Bitcoin in accretive ways by running the playbook, during Q2 and Q3. There's a misalignment there with the pipe deals fundamentally, where the investors that you're attracting are not Bitcoin investors. They're not long-term investors. They are people who see what you're offering, which is a 10% discount. And ultimately, a lot of these are hedge funds who say, okay, great, so I can get a 10% discount and I can immediately go, hedge out my exposure. Whether or not they do that with an offshore entity in order to make it legal, et cetera. Like there's all these realities of public markets that I think Bitcoiners aren't super aware of. And frankly, I'm not super aware of with some of how the pipe deal mechanics work, but hedge fund operators sure are familiar with it. And so you're attracting these hedge funds that are looking to deliver returns. And they, think through, okay, so I have to lock up capital for 3 months and I get a 10% return, and I can, just rinse my hands of it and be on my way. And a 10% return for that capital for a quarter of a year is a fantastic value proposition. So they're going to take that. But that means that they're going to be dumping as soon as they can. They're winding up their position as soon as they can because they're only ever interested in the discount. And it's very easy to attract that capital because there's a ton of it. They don't care about Bitcoin. They don't believe in Bitcoin. And they certainly don't care about your Bitcoin treasury company that you're excited about. But they're here to give you capital in order to collect that 10% discount. And that plays out on a large enough scale that it sets a trend. It starts to cause the tide to go out because all that selling pressure on a bunch of these pipe deal Bitcoin treasury companies turns into a downtrend for the sector globally. And then, that downtrend is kind of self-fulfilling too, because, a lot of people have leverage or they need to deleverage as their positions in the pipe deals start to go south. People start to trade off the whole sector, treat it as the same. All these, realities of human psychology play into it, I think. And the result is that everything trades off, everything, the tide fully goes out. And that's fine too. So in my mental model of the reality of Bitcoin treasury companies is that sentiment oscillates. And by sentiment, in particular, I mean people's market consensus perspective on the capacity of these entities to add Bitcoin per share over time. Like at any given point, there's a collective consensus via the market of the ability of these companies to deliver value into the future. When you're trading at 1x MNAV, what's implied there is that the market doesn't believe that you will ever add more Bitcoin per share. If you're trading at a premium, the market believes that you will be, you will add that much and more Bitcoin per share over time. And the Metaplan was trading at an 8x premium, or SmarterWeb higher than that at a point, and now both companies are at 0.95, 0.92, so under 1x MNAV. So the tide has gone fully out there, but I think the reality is somewhere in the middle, because from a SmarterWeb perspective, I know that we will find ways to add Bitcoin per share opportunistically in the future. There are things that you can do at a premium above 1x MNAV. There are things you can do at 1x MNAV, and there are things you can do under 1x MNAV. I know those latter two because I've been looking into it, and there are things that I'm excited to do when we're able to do them, hopefully quite soon.
One of the things, not to cut you off, that
Yeah.
has been discussed when people are below 1x MNAV, and we're actually starting to see this come to fruition in the market, is share buybacks. The idea of buying back your share in order to restore your MNAV, potentially increase it higher than 1 again. Is that something, and how do you think about that? I won't necessarily ask if that's something that's on the table. That'll obviously be news or an announcement at some point. But how do you think of share buybacks in the broader context of a Bitcoin treasury company? How do investors typically react, and what's the thesis behind doing them as a firm?
Yeah, I think about them a lot, and I think they're really attractive at certain conditions. In particular, the more under 1x MNAV you are, the more attractive a share buyback becomes. And I think it's unwise to use, your Bitcoin treasury to fund those. It could be a place where, if you don't have any debt, maybe it makes sense, to add a little bit of leverage for something like that, depending on how attractive the terms are, meaning depending on how much under 1x MNAV you are. I can say that we have a shareholder meeting happening in a week where there are a few items for shareholders to vote on, one of which is providing the authority to the company to do share buybacks, because it's a good tool to have in the toolkit, if you're under 1x MNAV. And it quite literally delivers Bitcoin yield to shareholders, because Bitcoin yield is all about increasing Bitcoin per share over time. And there's two things you can do fundamentally. You can either add Bitcoin to the numerator, or you can subtract shares from the denominator, and it results in the same effect of increasing Bitcoin per share. So that's something you can do under 1x MNAV. In a funny way, I'd rather be under 1x MNAV if I'm trying to add Bitcoin yield than to be right at X MNAV. In fact, anywhere 1 to 1.1 is probably the place I would personally want to be least from the perspective of having the ability to deliver Bitcoin yield through a variety of strategies. So I'm excited about that. There are still things you can do at 1x MNAV, but it's just slightly less long of a list. And yeah, so I think that it's becoming a popular topic because of the conditions in the market. It's extremely hard to go raise capital to buy Bitcoin, but there are things you can do to make the most of the sub 1x MNAV by reducing shares, which can deliver Bitcoin yield.
Excellent. Very well said. Thank you for the explanation. I want to talk a little bit about one thing you mentioned earlier, is that it would be hard to expect a massive bear market for Bitcoin if we haven't had this typical blow off top. I think the expectation this year was that you would see Bitcoin at 150, 165, followed by maybe the typical bear market in 2026. I put out a tweet a couple of weeks ago that said Bitcoin won't move any higher until every prevailing narrative has been ground to dust. One of those narratives has been the 4-year cycle. Another one that we're going through right now is that Bitcoin has entered into a bear market. For me, I'm not necessarily convinced that Bitcoin has entered into a full-scale bear market. I believe that the macro backdrop is only shifting more supportive in the coming months. I do think this is a typical mid to late cycle correction for BTC, but I think the runway is clear for a continuation of the bull in 2026. How are you thinking about Bitcoin currently? One of the other reasons I mentioned this is because you posted the Bitcoin and gold ratio, and you've shown how Bitcoin hasn't broken against new highs against gold in quite some time. So it's really hard to believe that we're going to see a typical 50 to 75% drawdown for Bitcoin. How are you thinking about Bitcoin, as we speak here just 2 days before the Thanksgiving holiday?
Yeah, that's my first stop for sort of sanity checking is to measure Bitcoin in gold terms, because in my opinion, that's the best way to neutralize the effect of fiat debasement over a period of time, because assets go up and to the right as you debase the value of fiat. It's not that the assets are becoming more valuable; it's that the dollar is becoming less valuable. And so to remove that effect over time, you can measure things in gold. And if you do that, we have not broken out in earnest, at least, from the 2021 highs. Yeah, great. Yeah, you have this chart too. So yeah, the value in gold terms of Bitcoin from May 2021 is right before the China mining ban. Is where we're at right now. And I think Bitcoin has proved itself a lot more since then. And we're mining half as much per day as we were then. The hash rate is astronomically higher than it was then. We have the Bitcoin ETFs. We have the fledgling Bitcoin Treasury company industry buying as much Bitcoin as they can. Strategy has launched their preference share vehicles and is hoovering up Bitcoin by issuing those fixed income instruments. You now have sovereign wealth funds buying Bitcoin, and that was not on the radar 4 years ago. And yeah, the success of IBIT and the other ETFs and what that means about Wall Street capital deploying into Bitcoin. It's a very, very, very different world versus 4 years ago. And yet in gold terms, we're trading below that level. So I think that's just an indicator that, it may feel like we've had a bull market because we got, above 100,000. But when you account for true inflation by looking at it in gold terms, we haven't had a bull market. And that's where ultimately I think the way a bootstrapping store of value asset goes from zero value to a lot of value is by having boom and bust cycles, because nothing goes up in a straight line. Human psychology gets too excited, turns things into bubbles, and bubbles crash. And so if you have a major bull market, the way to reset sentiment, and this is just, I guess, how markets work, is the tide goes out, right? And you have that pain of a 75% drawdown, delevers everybody, reset sentiment. People go from overly bullish to overly bearish when the reality is somewhere in the middle. And that only makes sense if you've had like a 5-10x bull market. You only need that kind of pain to reset sentiment if you've had those kinds of gains. And we haven't had that. So I don't see a reason to logically expect that the market needs to wash out a lot of speculators who are over leveraged. And so instead, I agree with your kind of take that I think what has happened is that there's early Bitcoin holders, the OGs, the whales, who have lived and died by the 4-year cycle and have seen enough of them that they have this mental model that, okay, the halving happens and then you sell a year and a half later, and that's the top. And then and then you buy again a year after that, because that'll be the bottom. That's how it has played out for the last few cycles. And that would have been October, that year and a half top. And that was $126,000. So that was the top, the local top. And I think is precipitated because of that popular mental
It
model
becomes
with
a
these large
self-reinforcing
holders.
feedback loop at that point.
Exactly. So I think that those traders, those whales who traded on this thesis, precipitated the local top that we saw. I think it also sort of happened to line up with a sell-off in traditional markets. But their thesis is that marks the major top for a 4-year cycle. But I don't see that should be the case or would logically be the case, because we haven't had a bull market. So I kind of think that we're going to see something in the middle here. Like maybe it's like summer 2021. It took, the China mining ban happened. You had quite a bit of a sell-off, and it took 3 months for the market to kind of break out again. It went sideways for 3 months or so and then rallied. I kind of expect something like that, because this has been, shocking, I guess, to have quite a sharp downturn. So we'll see. But I have a feeling it's I have a feeling that it's a pause before a continuation of the structured institutional bid that Bitcoin has been in for the last 3 years. And I think this will be looked back at as the cycle where, I think this will be looked at as the cycle where the Bitcoin whales were proved wrong to continue to believe and trade on a 4-year cycle hypothesis, when Bitcoin has now matured to become a global institutional asset that trades like a global institutional asset.
Very well said. And speaking of the institutional bid behind Bitcoin, I want to get your thoughts on this chart, because it's one that I think you'd retweeted when I posted it. This is the Bitcoin ETF AUM in the US versus spot Bitcoin. So the AUM is in white, and spot Bitcoin is in orange, befittingly so. And you could see that during this period where, we marked kind of the Pico cycle top, well, maybe not cycle top, but the Pico local top at $126,000, Bitcoin is drawn down by, I think, 36% peak to trough. The ETF assets are largely flat from the end of September. If anything, they're down about 5 to 7%. And so really, this new institutional bid is kind of hanging tight in the face of these OG whales selling. I think if there's any chart to really effectively paint this picture that Bitcoin is now being held by a different class of people, it would be this one.
I agree. I retweeted this because it was very illuminating to me to see, what you highlighted here. It really says that the Bitcoin ETF buyers are buying the dip, and they're adding to their position here because they're not spooked by this drawdown. And I think it kind of highlights like the different psychology of ETF buyers versus crypto natives, where a lot of crypto natives are, whole portfolio crypto and leveraged. And so when there's a drawdown, they have to delever and they get liquidated, and they don't want to be selling, but they become forced sellers. And when a dip happens, rather than being able to buy the dip, they have to sell and make the dip worse. As opposed to, a boomer with a little bit of Bitcoin in their portfolio. Maybe they've got 1%, maybe it's 5%, and a dip happens. They're not put into a position where they have to be forced sellers. Instead, they see it as a buy the dip opportunity, and maybe they increase their portfolio allocation a little bit. From 5% to 6%, but here they are buying the dip. So I think that's kind of what is playing out in these two lines, and I think it speaks exactly as you said to, like, there's a new cohort here. It's really TradFi capital, and maybe that manifests as, maybe at the end of the day that is boomer portfolios that have a tiny percent allocation to Bitcoin as an asset class that you should own, but they trade in a different way, they behave in a different way, and they're happy to buy blood in the streets.
Absolutely. Yeah. Two completely different worlds here. One trading on margin and selling, when times get tough. And the other who just looks at it as an opportunity to continue scaling in their position, or at the very least, not sell, right? Because they're much, much more long-term thinkers. We see this lineup too with Bitcoin's volatility near all-time lows. Obviously, barring what has happened since mid-October with this massive sell-off. But major declines in Bitcoin's volatility on a secular basis. You see the Czech central bank buying Bitcoin today. We just spoke about beforehand. Texas is now, they just funded their strategic Bitcoin reserve, $10 million worth of BTC. And so at the same time that there's this tremendous retail panic, the fear and greed index is near the start of the last bear market. It's worse than the 2022 bear market low. Despite that, you see these major institutional allocators buying in size. And so to me, it's really like you have to fight your psychology to not be bearish when the herd is bearish, but looking underneath and seeing all of this data, it's really hard not to be bullish, particularly when you're observing Bitcoin for what it is, which is a macro asset that you want to hold over 5, 10, 15 years.
Yeah, I kind of view it as you summarized it nicely of it's probably like a mid to late cycle correction where the psychology starts to become a little bit hard to tell, like, is now the right time to be bullish because the majority of people are bearish, or is it the other way around and I don't have the right sense of where I'm sitting. But and as you get closer to deeper into a cycle, it becomes more confusing about like who's offsides here. But I have a feeling that, as you pointed out with the fear and greed index, like people pretty quickly flipped to fear, over the last month or two. And without much market reason, in my view, like, this is kind of a garden variety correction. And it certainly would have been in 2017. There were like 7, 8, 9 of these 30% plus corrections in the 2017 bull market for Bitcoin. And yeah, so, I think that the fact that people so quickly started to feel like this is the beginning of a bear market is not something that happens at the start of a bear market. I think there's a persistent belief that things are going to go higher still for the majority of people, when you're at a true top, because people are most bullish at the top. And right now we kind of have this weird mix of like people are pretty quick to be bearish. So I think it's somewhere just short of the top.
Very well said. I want to, round out this discussion over the next 15, 20 minutes, talking about Bitcoin treasury companies once more. There's a lot of unknowns around Bitcoin treasury companies. Many people just aren't in the know about the way that these things work. And I think a really helpful infographic that you made here, you are the king of infographics as far as Bitcoin is concerned, can really effectively explain the primary utility of Bitcoin treasury companies. I think you made this back in 2020, you said, for MicroStrategy.
Yes.
Walk us through what this diagram is showing and kind of the basic premise behind Bitcoin treasury companies and almost how they're allowing, they're essentially just executing on the exact same trade that any individual is executing on, just at much greater scale because they have much greater access to capital markets.
Yes, exactly as you say. And the thing that a Bitcoin treasury company adds is that as a corporation, it has access to capital market tools that individuals don't have access to. And it also has access to more attractive interest rates that, if you wanted to go take out a loan, a dollar-based loan to go buy Bitcoin as an individual, I don't know. Of course, it depends on individual circumstances. If you do that with a credit card, you're paying 20, 25% interest rates. If you do that with a personal loan, it's something like 15, 10%. Of course, you could get something collateralized and have it be lower if you have assets that are suitable for that. But a corporation has the ability to get single-digit interest rates on fiat-based debt, and we saw that with Strategy started doing their fiat-based convertible notes in 2020, and this was my effort to try to articulate in a super simplified view what was happening here. This is really the visualization of Pierre Rochard's speculative attack concept, where, if you believe in Bitcoin, if you understand the thesis and have conviction in it, you believe that because of Bitcoin's endogenous properties and especially the macro backdrop, Bitcoin's purchasing power will go up over time. And similarly, you believe that they will have to print more fiat, and the purchasing power, the design of fiat is to inflate, to debase the value of one unit over time. It's built into the system. So in a funny way, that the green line going down is guaranteed. It's part of the design. The only thing that requires education and conviction is that the orange line will go up. The Bitcoin will grow in value over time. But if you get to a place where you have conviction in both of those diverging realities, then and you imagine time playing out, this is what it would look like, and it creates an opportunity where if you can borrow dollars today to buy Bitcoin and then wait enough time such that that diverging reality of these two assets manifests, then you can, in theory, settle the debt in the future by selling just a portion of the Bitcoin that you acquired with that debt. And then you profit from the remaining amount. And this is ultimately what Saylor started doing with MicroStrategy in 2020. It's the speculative attack playing out. And it's now what he has improved upon, in my opinion, with the preferred equity instruments that they've now set up, where it's exactly this playbook, but with even better debt characteristics for the issuer, for Strategy as a company. So, this is, in my view, what Bitcoin treasury companies are capitalizing on, is this reality between these two assets, that Bitcoin appreciates over time and fiat depreciates over time. And everybody wishes they could do this, but Bitcoin treasury companies are best positioned to do it because they're corporations, and they can borrow at single digit rates. They can set up preferred equity instruments to do that. And I think we're at the very beginning of what will become a multi-decade trend of Bitcoin treasury companies tapping into the fixed income market in particular, offering fixed income investors a better value proposition than they can get with fiat powered deals, and offering that because it's powered by Bitcoin. So if Bitcoin's appreciating at 29% a year over the next 2 decades, which is Saylor's estimation, then you're happy to pay 10% interest to borrow capital to buy an asset that's going to appreciate 3 times greater rate. That's what Saylor's doing. That's what the preferred equity instruments do, and that's why fiat fixed income products can't match it, because they are not riding the uplift of Bitcoin. They can't match that kind of interest rate. They can only offer the going market rate of 5%. So, in that sense, Bitcoin-powered fixed income products like these preferred equity instruments that Saylor's pioneered, and I think every Bitcoin treasury company in the world would like to also roll out, they're going to eat market share over time in the fixed income market. And what that amounts to is getting all that capital to switch out of the products they're in and divert into these Bitcoin-based products, which amounts to handing over that capital to Saylor or whatever other Bitcoin treasury company, so that company can buy Bitcoin and channel all of that capital into Bitcoin, which will further monetize Bitcoin over the next 2 decades.
Very well said. masterclass, if you will. Yeah, one of your more popular graphic explainers is kind of this asset pump. This is a version of it. It was overlaid with a few other graphics by somebody else, but I'll share my screen here that kind of illustrates what you were speaking about. That kind of shows these pumps, if you will, of all of Strategy's different instruments and the markets that they're pumping capital from. We've seen that these instruments have just been exceedingly successful. One other thing I kind of want to discuss, if you want to, you could chat about this chart, but another thing that I'd like to discuss is what has happened in recent days regarding JP Morgan and kind of this whole rumor mill that because of failure to deliver MicroStrategy shares in a timely fashion for people who wanted to move brokers, a lot of folks are speculating that JP Morgan is rehypothecating shares and lending them out to short sellers for MicroStrategy, or if not, they're just openly shorting strategy itself. That's another topic we could hit on, but I wanted to throw up this graphic just in case you had any other commentary on it.
Yeah, on that point, I don't have much to say, but I have said, I have heard someone tell me that you know, they were talking to some large Wall Street player, and that Wall Street player offered to them, you know, like you could borrow $1 billion of MSTR if you wanted to short it. but you can't borrow a much smaller amount to go long on Bitcoin treasury companies, which I heard that story because it was surprising to that individual, and I think that could be telling about what has at least been a popular trade over the last 6 months with regard to Bitcoin treasury companies, and in fact may be something that is being potentially promoted by large players. You know, I don't know about that part, but I think the incentives are there for the Chanos trade to have become popular and then become kind of promoted because, you know, in the expectation that others would be following suit, probably because a lot of them did. So that's all I have to say on that. And then this graphic I love. I made my own version of it after. I always forget who made this particular variation, but this is how I see it. I think that each Bitcoin treasury company in the world is a pump that's got, you know, pipes stuck into whatever TradFi markets it has products designed for. Most have only their common stock, so it's really just to the equities market. But the ones that have preferred equities, like Strategy, like Strive now, like MetaPlanet, they are tapping into the bond market and the money market if they have a stretch-like product. And yeah, I think that Bitcoin treasury companies will be the preferred channels through which TradFi capital will reallocate and rebalance portfolios from fiat assets to Bitcoin assets, and they're going to do it through these channels because you know, Bitcoin treasury companies create the products that meet that capital where it's at. In other words, they offer the 10% fixed income product instead of saying, hey, buy Bitcoin.
Fantastic. So we're rounding out the discussion here, Jesse. We've hit on a lot: Bitcoin market structure, where we think it's heading, the idea behind Bitcoin treasury companies, what you're doing at SmarterWeb UK. Closing out the show here, kind of in line with the name of the show, Over the Horizon. Over the next several months, 6 months, 18 months, what are the biggest developments on the horizon that you are looking forward to, either with SmarterWeb UK, with Bitcoin, where you think the market's headed, anything at all?
Yeah, at SmarterWeb we have quite a few catalysts that we're excited about on the horizon. We aspire to eventually be included in the FTSE 250 and then hopefully 100 indices, which you're only eligible to be included in those if you're on the London Stock Exchange. In addition to that, there are potential things we can do with, you know, given low MNAVs that I'm excited about doing if that comes together. You know, when when certain criteria are met. And yeah, I think looking further into the future, I think we're at the very start of, as Saylor has put it, the very first year of the digital credit industry. And I think that Bitcoin treasury companies are the tools that will create that industry and that future for the fixed income markets in particular. And SmarterWeb aspires to be a part of that in the UK. And so that'll be an exciting frontier to help blaze a trail in, and look forward to doing that. And so long as Bitcoin continues to appreciate over time relative to fiat, which I think is certain, then it's a very exciting future for Bitcoin powered financial assets.
Fantastic. Jesse, thank you so much for coming on the show. Really appreciate it. Great to catch up. For folks who want to find more of your work, where do you want to send them?
Yeah, you can find me on Twitter. I still call it Twitter, on X, on Twitter at Croesus_BTC. And you can also go check out smarterwebcompany.co.uk, and check out our analytics dashboard to see the track record that we've developed of increasing Bitcoin per share over time. And, we look forward to doing everything we can to continue that into the future.
Fantastic. Jesse, thank you so much for coming on.
Thank you, Joe. Great talking.